this flip entry model will change your trading game forever. Pay attention. It's coming here. In today's video, I want to show you how to improve your entries using this flip entry model. So we're going to use this diagram before we go to the chart, but let me explain to you in details what this is and how you can implement this on your trading step day by day and step by step. Simple. So the first thing that I want to do is, so we're going to call this diagram A. So let's call this diagram A. The reason why we call this diagram A, and we'll call this other one, we call this diagram B. Now these are two different things, and we need to pay keen attention to what I have to teach you before we go to the chart. Meanwhile, smash the like button, subscribe to the channel if you want more valuable videos just like this. So the first one here is this. The first thing to note is this point of interest. All right. Now, in order for this flip entry model to work for you, you must first of all know exactly how to identify your point of interest. So the first thing is this. First, we need to know exactly what price is doing. So to trade the flip entry model, we need to first of all pick our point of interest. And how do we pick points of interest? We need to pick our point of interest based on the takeout of inducement, liquidity sweep, and so on. All right. So let's assume now that we have picked our point of interest. What exactly is price doing? Price pushed up, broke this high, retraced, meaning price is bullish until it touches our point of interest. So these are point of interest now on the hard time frame. Now this, all the price action on this box is actually a lower time frame price action. Okay, so now what exactly are we waiting for? We are not going to take our trade blindly. We are going to wait for a change of character, which is the first intention of price going to the opposite direction. So exactly what happened here. So we have this as our change of character. Now where this is where the flip entry comes in. This is very tricky. I want you to pay attention, otherwise you are going to miss it. All right, take your time, pay attention. You can rewind the video and watch it all over again. You are going to understand it better. So the first thing is this. As you see, notice that price keeps going. We keep drawing our zones, our demand zone, as the case may be. All right, so that's exactly what we do. You can use your eye, but if you're a beginner, do it exactly as I'm doing it. This is the best way to be able to capture all of the flip zones. These are very important. So immediately this happened, we have a break to the upside, of course. And what else? Price came, reacted a little bit, behaving as though it wants to go up, and what happened? Immediately price pushed to the downside and did what? And break structure to the downside, which gave us our change of character. Okay, so in this case, what do? It's quite simple. So after we have our break, our change of character, the next thing we need to do is we need to identify our inducement. Inducement is still very important when it comes to flip entry. I talked about inducement in our last video. I recommend that you watch that video. It's about 40 minutes long. That's everything you need to know about inducement. Major and minor inducement, they are going to change your trading game forever. So the first thing, after we have seen a change of character, after we've identified our flip point, of course flip zone is this, then the next thing is we need to wait for another break of structure to the downside or to the direction of our trend, as the case may be, right? So we have this as our break of structure. So we now mark our zone for what? For inducement. So this becomes our inducement. So after the inducement, now take note, this is very, very important. After the inducement, if the zone have a flip, if there is a flip zone after the inducement, it makes it more enticing, makes it more solid. All right, so for example, normally based on order flow trading, all right, which we discuss on my other YouTube channel, based on order flow trading, what else can we check? Immediately we see that inducement have been taken, we expect that price reacts from what? From the order flow. Now this makes it very easier for you. Flip entry make it very easier for you. So instead of looking for the overall order flow, of course, you must learn to put all the pieces together so that you can improve your entries and improve your win rate in general. So now that we've seen in our order flow, within our order flow, as the case may be, we've seen a flip zone. Where's the flip zone? This is the flip zone. Why is it the flip zone? It is the flip zone because this was the move that flipped this buy. Okay, so supply flipping the demand. So demand going to the upside, supply coming to the downside. So that becomes our flip zone. So immediately inducement have been taken. The next thing that we're looking out for is a flip zone. So in this case, this is where we now enter our trade. We enter our trade based on the flip zone, and this is going to be our stop loss. Our stop loss will have to be above our point of interest, because that's where we are going to get more solidified stop loss placement. However, with mastery, you can choose to put your stop loss here. Of course, it's going to increase your risk to reward ratio. However, the chances of your stop loss being hit here is higher compared to when your stop loss is at the point of interest high. The reason is simply because most times it could escape you, and you will think this is the inducement, whereas this could be the inducement, and price comes, takes this out, reacts from your point of interest again, and continue to the downside. So the safest thing to do is to please take your entries like this. Now let's go to diagram B. If you are enjoying the video, smash the like button. Diagram B is quite different from diagram A, especially seeing that diagram A usually has this. So for example, diagram A goes like this into our point of interest with full body. So what we do, that's why we have to wait for what? Inducement. But diagram B is not the same. With diagram B, this is just a sweep. All right, so let's say there was a sweep into the point of interest. Let's assume that there was a sweep into the point of interest just like this. What we need to do, let's say there was a sweep like this. What we need to do is this: just wait for our change of character. Immediately our change of character is spotted, we have to what? Look for our flip zone. How do we look for the flip zone? The easiest way is check to the left, the break of structure to the direction of your trend, mark the demand zone, and allow price to trade against it. So when price trades against it, as this case, we have a change of character, which makes this zone a flip entry automatically. So what do we do in this case? In this case, we are not going to wait for an inducement like this. As you can see, we are going to enter directly. Why are we going to enter directly? The reason is simply because we already have what? A sweep. So there's already a sweep of liquidity. So once liquidity is taken, price ought to move to the opposite direction to seek out for what? For the other liquidity. By the time we go to the chart, you are going to understand this better and more vividly. Make sure you smash the like button and subscribe. Now, what now happens if price comes and decide to react here? This is why I always say make sure that you put your stop loss above the high, right? Of course, it might reduce your risk to reward ratio, but you see, it's going to increase your win rate. And this is very, very important. All right. Now, this doesn't mean that your risk to reward ratio will be really, really low. It's going to give you like 1 to 2 to 1 to 3, and even as much as 1 to 4, depending on where the opposing swing point is coming from. And we'll get to know that once we go to the 5-minute chart. Okay, so I just hope you have this clear and cut. I hope you just have this, you understand this better. Okay, so the diagram A, you will need inducement. Why? Because there was a body close after the mitigation of our point of interest. Why this one why diagram B involves sweep of liquidity after the mitigation of point of interest. I hope it's clear. So let's go to the chart and let me show you exactly how this works. So we're going to use this particular day for an example so that you can have time go to your chat back test. Anything you don't understand, come back to this video, watch it over again and rewind it, watch it over again, and don't also forget to let me know what you think about it. Okay, so this is very, very important. So forget about the diagram on board right now. So let's start from this day. Now, what are these vertical line? These vertical line are the KDRC stamps. All right, this is my personalized way of identifying the trend, and it has over 90% accuracy. Yes, the trend direction of this KDRC have over 90% accuracy, and I've tested it and it's working. If you're on my free Telegram channel, you should be seeing it on a daily basis. Feel free, check the video description in order for you to get access to our free Telegram channel. It's free. All right, so I send free setup literally every day before entry. Okay, now let's start from the day. First, we have been able to identify our trend direction. So probably we could start from we could even start from here, from this day. So on this day, you can see we are still bearish, so we're only looking for selling opportunities. Okay, so let's do this, and before we call it a day. So the first thing we want to do here is we're only looking for sales based on the KDRC, and where is it? We have our break of structure here. So immediately our break of structure have been found. Take note, this is the higher time frame. Now for your higher time frame, you can use 4 hours, you can use 1 hour, you can use 50 minutes, and you can use 1 minute. Now this depends on the time frame you want to use to enter. If you want to enter based on 1 minute, then you can use 15 minutes as higher time frame, or the 5 minutes as higher time frame. So I'm using the 5 minutes and 1 minute for entries. So 5 minutes for higher time frame, 1 minute for entry. So after the break of structure, what else are we supposed to be looking for? We need to look out for our inducement. So where is the next inducement after the break of structure? This actually is the inducement after the break of structure. This ought to be the inducement, but unfortunately price never came to mitigate this inducement. So we wait patiently, we don't rush, we don't chase trade, we wait patiently, and this is another break of structure. So we have a shift of structure. Now remember, if you watch my previous video where I talked about inducement, major and minor inducement, you should know that this is not an inducement. I know you could possibly say, oh, what about this? This is not an inducement. No, it is not an inducement. Let me just tell you now, one of the reasons is because this low did not take out this previous low, so therefore that's not a valid move. It's just an internal structure, and like I said, we need to work with the real market structure. So after break of structure, what else? We need to wait for inducement. And where is our inducement? This becomes our inducement. In case you don't understand inducement properly, I recommend that you check the video description. I'm going to drop the inducement video right there for you. You will love it, believe. Okay, so after the inducement is taken, what else? We now have what? A point of interest. So this is our point of interest, so I won't talk much about it. Check the video description as well for that. But for the sake of this video, which is the flip entry, so we're going to mark out our entry, our potential zones immediately after what? Immediately after inducement have been taken, so that we can use that as a buffer to know exactly where we ought to look for our flip entries. So we'll go to 1 minute. By the time we are done marking the higher time frame zones, we'll go to the 1 minute and check them. So as you can see, these were the only valid one. So we'll come to this next day. On this next day, you can see that we are still bearish based on the KDRC. This is the KDRC stamp 1, very powerful, right? So I'm expecting the sales. So break of structure, then we look for inducement. Where is our inducement? This becomes our inducement. This is our inducement actually. Okay, so we have our inducement here. So after the inducement, what else? We are looking for points of reversal. So we have this, and we also have this. this makes it more powerful. All right, so we have this and we have this as well. Let's take this there. Exactly. So I already showed us why all of this, why we're marking this. So these are points of interest, points of reversals, and just know that we are not just marking them, we're marking them based on knowledge. So we have a break of structure inducement here, and we have another one here. So as you can see, all these move are internal structures, so we're not interested in this move as it were on higher time frame at least, but on lower time frame, as you can see. All right, so I remember sending this to the free Telegram channel. We missed that, and we also missed this, and I think we caught the gold setup for that particular day. You can check our free Telegram channel. You are going to see the setup before and after live. Okay, so this becomes a break of structure. This is actually a break of structure right here. So we have this as break of structure to the downside. After the break of structure, what else? You should tell me now. Inducement. So where is our inducement? This is our inducement. No, you just got it wrong. This is not inducement. Why? You see, we have this low. This is the actual low, right? So what price did was like this. So just simply put that this is exactly what price did, just like this. Do you understand? So this is what price just did. Okay, and this is why this is not an inducement. So what do? We wait, and there is what? A move, a shift of the point of interest, and we have this. Immediately this happened, what else are we looking out for? Inducement. Where's our inducement? This becomes our inducement actually, except we want to look at the internal, but I don't want to talk about that in this video. We'll do that subsequently. Okay, so let's see exactly what happened. Okay, so I think we have a last one here. This is an inducement. So let's go to our lower time frame and let's see how we can be as fast as we can. So we're starting from here, right? So we'll go to the 1 minute, which is our entry time frame. Now I'm doing this so that you can see it exactly how I do it personally, and you can start implementing this on the chart. So the first thing is identify the direction of the trend, which is very important. Once you get the direction wrong, you are going to get literally almost everything wrong, right? So with the KDRC, I tell you the truth, it's actually a game changer. All right, so let's start looking for our entries. So this was the first one. As you can see, there was no entry here, so let's not waste much time. There's no entry. Look at that. There's no break of structure. Price continued and pushed up, and we have another point of interest right there. And could we check if we could see potential entries? Of course, we have what? We have a break. Take note, break to the upside. I already showed us this on the diagram. Break to the upside, and this is the low. So we're expecting that this low is taken as our change of character. However, that low, before price came to this low, price did something else. Price swept this high, right? Which means automatically we want this low to what? To be taken. So this becomes our change of character. Do you understand? This becomes our change of character. Let's write it there, right? So this becomes our change of character. So after our change of character, what else are we actually looking out for? After a change of character, we are looking out for what? Our inducement. But in this case, we don't need inducement. Why? Because it is a sweep. Do you understand the diagram that I already explained? Where is the diagram now that I explained to you, which is the second diagram? All right, so let's go back, and which is the second diagram. I hope you understand that if it's a sweep, you don't need an inducement first. You just have to take your entries. That's exactly what we see here. Of course, we are going to see the example of where we need our inducement. So in this case, we can now look for what? Flip zone. So where is our flip zone? Take note. Let's look for our flip zone now. Price kept pushing to the upside, right? So we saw price going up and did what? After price went up, we saw mitigation of this zone. All right, same thing happened here. Pushed up, mitigation of the zone. All right, what happened? Price swept this high. What happened? Mitigation of the zone. So automatically, what? This demand zone is turning supply. It's being violated by this push to the downside, which now makes it what? Our flip zone. So this becomes our flip zone, and this is an order flow, right? Like I said, check the video description to watch the order flow video as well. Okay, so this becomes our order flow, and of course this becomes our entry. So where's our stop loss? Yeah, we're placing our stop loss here. No, this is not our stop. We're placing our stop loss a little bit above this high, because that's where we really want price to go to. So where are we going to target? We can actually target as far as this low. That's a fact. Can target as far as this low. This is 1 to 6, and of course I don't target up to 1 to 6. So my average is actually 1 to 3 risk to reward ratio. My average, okay, and that's my average anyway. So in this case, we have price did what? Tagged us in and pushed down, gave about 1 to 2.27 risk to reward ratio, and before breaking even. And of course, if we had used this high, probably would have got something better, but like I said, this is the safe zone. So let's go without wasting much time. All right, so all of these things are just noise to us. We are not interested because we already mark our point of interest. Do you understand? So in a live market, you must wait for your point of interest. Okay, so this is exactly what's happening here again. So we have what? This pushed to the upside, pushed to the downside. So in this case, there is no flip zone as it were. All right, so we have this, we have this, we have our change of character now right here. So in this case, we have to wait for what? We have to wait for our inducement. But as you can see, there is no flip zone here. Look at the box. Is there any flip zone? There is no flip zone as it were, right? There is no, even the structures going to the upside, they are not clear. They are full of wicks. So we are going to jump that, and let's go to this next one. So this next one, as you could see, it's very clear, very clear, very clear. So most times, the ones that are very clear tends to provide you more better opportunities and entries. As you can see, so this particular one, we actually need inducement. We actually need inducement, but unfortunately, inducement, of course, let me show you something. Push up, break of structure, change of character right there, right? So which is, where is our what's it called now? Where is our flip zone? This is our flip zone. Look at that. This is our flip zone actually. All right, so on a norm, we ought to take this trade like this, but we can't take it like this because we need to wait for inducement takeout. So until inducement is taken, there's no way we'll be able to take this particular sell. Look at that. All right, so probably if you are very aggressive, maybe you are being moved by emotions or whatever, you would have seen this as inducement. Of course, it is to a certain extent. Let me explain. So I will zoom in so that you can see it very well. But for me, I wouldn't really take this as is inducement as it were, because this is the candle that would have, that would have validated this as inducement for me. However, this candle traded inside this candle, so I don't think I would have taken this as my inducement. So this whole trade would have been missed by me, of course, but for the purpose of this video, let's just pull that up. So this becomes our entry. Of course, I said your stop loss will have to be here, right? But in this case, you can see that the stop loss is a little bit big. Even though it's big, you see I've given you your 1 2 3 and you are out. All right, of course, I wouldn't want to break the rules in that case, so wait patiently for another opportunity. So this is another inducement takeout which we have marked. These are points of interest. Take note, we already saw a mitigation of the zone. This is a mitigation of a particular zone, right, which is a point of interest on its own. So we have a mitigation right there. Price pushed down. This is exactly what price is doing right here. Okay, like this, like this. And so in all of this, there is no way I would actually enter the trade because there is no flip zone, right? You understand? There's no flip. So the only zone we want to look out for break is going to be here, right? I hope it's quite understood, because everything that is happening here is just an internal structure, just noise. They are just noise, all right? So that's exactly how we, how we react to things like this. So immediately this happened, what else? Remember, as this is we must wait for what? We must wait for inducement. Okay, in this case, in this particular example, we must wait for inducement. So after the change of character to the downside, where is our inducement? This is our actual inducement right there. These are inducement. So let me show you, let me mark it out for you. These are our inducement. And in this case, what do? This is where we need to understand how the market works. All right, so internally, if we want to check this whole structure, internal structure, what can we say? You can see that something like this is exactly what is forming. All right, like this, push down, push up. So this alone gives us a valid structure. Push down, break this low, of course, price reacted, one down. So where's our flip zone? This is our flip zone right there. I hope you understand how we're able to get it. So let me draw it for you so you can see it. So this is our flip zone. This is our flip zone, because this was the last selling candle before the buy. But in this case, this whole zone becomes our demand zone, as it were, or other block, whatever you want to call it. Okay, whatever you want to call it. So we have this and this. So where is it? Where is our entry? This becomes our entry. As you see, this now broke this internal structure. Okay, so we have this like this. So probably like this. So this is an entry opportunity. And of course, target this. And of course, this whole zone would be your stop loss. But that's far way too much for me, right? And this is why I said experience is very important, and backtest, do a lot of backtest. You are going to understand it clearer. So I think on this, I was not on chat. That's why I missed this. So I was just watching the trade, right? I actually missed this entry. I remember vividly, I missed it. So that's why I had to look for another entry opportunity, because each point of interest used to give me at least 2 opportunities to enter. At least 2 opportunities to enter. And I will show you if we have time. Otherwise, subscribe so that you can watch and see it in my other videos. Okay, so immediately this one happened. This is another one. This was the one I was waiting for after I missed that. So we have this as a continuation of trend. Okay, so I was actually waiting for this for a body break of structure here, which never happened. So but it happened right here. Okay, and as you can see, this was not necessarily a sweep, because you can see there's a candle close here. So understand, these are things I practice. Okay, so immediately this happened, I was actually waiting for what? Waiting for inducement, which becomes this high, and it's never happened. So if this inducement would have been taken out, of course, price would have tagged us in and pulled down, and I sent this right, and it was missed actually. However, if you have looked at it with this diagram B, with the light of diagram B, this is an entry opportunity. But like I said, that is not how I take my entries. Okay, so that's how we missed that particular one. Let's see if we still have the last one, or is that all? Okay, I think that's all. Right? So you understand exactly how you can use the flip entry model to improve your trade. In case you really want to learn about minor inducement and major inducement, or you want to learn about order flow, or you really want to learn the KDROC strategy, check the video description and see you on the inside.